Hello, good morning, everyone. Thank you for joining me for another video. It is your host, Crypto Glenn. Feels like I've been gone away from YouTube for a while, because I have, but for good reason. As you see here on the screen, I have been building out my TikTok channel. If you enjoy some of my longer formatted content videos, feel free to follow me here on TikTok. A lot of the same quality, shorter format, and these videos are actually kicked out a little bit more in terms of the sheer amount of volume. So it's a good place to connect with me to get information or my takes on things a lot sooner. And yeah, that's the TikTok channel. If you woke up like many of us did today, you may have found yourself asking a question: what happened to Bitcoin? From its price high of yesterday, Bitcoin has actually shed around $1,500, and many of us are trying to find out what exactly is the culprit. If you've been following me on Twitter, you would have known 15 hours ago I had posted a tweet that said, if you want to know where the market in September could do, you might want to take a look at the CPI data tomorrow morning. The CPI data is a consumer price index. It gives us a good indication of where inflation can go and what the Fed might do to try to combat that inflation. And that information was released around 8:30 this morning. And the information that was released in today's CPI data is the reason why Bitcoin has fallen beneath $22,000. We're going to talk about this more in a little bit of detail here in just a second about what this means for Bitcoin in itself, but there's a couple stories that we want to take a look at here. The first of which is basically about the information that was released from the CPI data. What this means is the price or the CPI data, while it was lower today than it was in September, it is still going up, which means inflation is still very much a factor that the Fed is going to have to deal with. Like we've seen before in months past, whenever the CPI data is high, usually the Federal Reserve comes out, Jerome Powell, and they say that they're going to raise interest rates. Whenever interest rates go up, that's normally bad for things like crypto, as people will try to move from risk on investments to things like the dollar. More about that in a minute. So what's the big deal? What's the situation that we need to take a look at here? While inflation decelerated in August, but it remained higher than what economists had expected, it's a sign that the U.S. Federal Reserve will stay aggressive in raising the interest rates. The consumer price index rose 8.3 in August from a year earlier, but a mild slowdown from the 8.5 reported in July. This is what economists at FactSet had forecasted at 8.1, and so the number was slightly higher than expected. And this is why we all woke up today taking a look here at TradingView to this big old red candle. Now, the thing that I will see on social media, on YouTube, is a lot of times people will try to remain bullish. And I get it. Nobody wants to be the bearer of bad news, but from an investing standpoint, we have to be smart about the information that we consume here. We're taking a look here at this chart. There's nothing really bullish about what we're looking at here from a technical analysis perspective. You can see here we got above the 50, which is good. We closed, but we did not get the continuation candle that was needed to actually signify us continually move to the upside, as well as this dark red line here. This actually represents, and I'll see if I can zoom out here. This actually represents a resistance line that is hitting every single high from where we were at around 68,000 to where we're currently at now. And you see that Bitcoin just continuously puts on lower lows as we go on. So until Bitcoin is actually able to get on the other side of this 618, as well as cross over this resistance line that we've basically put in from 68,000, Bitcoin is going to remain in a very bearish territory. And again, we're constantly hanging on to this $20,000 trend line that we're ranging in now. Again, the more times you hit it, the more likely you are to fall to the downside. So that's something that we definitely need to be paying attention to. In regards to the Federal Reserve possibly coming out and raising interest rates later this month, this is going to have a significant impact on the DXY. The DXY is a US dollar index, and this is just basically a measurement of the dollar. And as the dollar gets stronger, again, more risk on investments such as crypto and Bitcoin, they tend to go the opposite way, as they have an inverse relationship with the DXY. What are other proponents that could potentially affect the DXY getting stronger as the year goes on? Well, when we continue to look at things from a macroeconomic perspective, Europe is facing an energy crisis as Russia cuts gas. If you've been paying attention to the story, you know that Russia is in an ongoing conflict with Ukraine. And currently, what they have recently done is they've basically cut natural gas supply to Europe. Now, this is especially problematic because as we get closer into the winter months, folks in the EU may not have full capabilities to stay warm, basically. And what this article just goes on to say is with the lack of gas, natural gas going into Europe, we could potentially see rolling blackouts, shuttered factories, and a deep recession. Now, if in fact a recession does hit the European Union, I'm willing to bet that more people are going to flee the euro as they have been doing and move to the dollar. Again, a stronger dollar is going to have negative consequences for all of us here that are in Bitcoin as well as the stock market. As you can see here, the Dow Jones is down almost 3%. The S&P 500, I believe, was down 6%, right? So this is just kind of bad news all the way around. For those of us that are actually in the investing world, you can see the S&P 500 right here is currently down just under 3%. The Dow is down 2.5%, and the NASDAQ is down just over 3.5%. However, with that being said, that's not all entirely bad news, is because, again, down markets give us an excellent opportunity to buy and fill our bags in a bear market, which I think is something that everyone should be doing, is dollar cost averaging into projects that you deem fit. Breaking news coming out of Fidelity, Citadel Securities, and Charles Schwab. They plan to get together and launch their own Bitcoin and crypto exchange. This is especially big news because a few weeks ago, if you've been paying attention to the news cycle, you would know that BlackRock was offering Bitcoin to its institutional investors. And basically what we have here is an exchange that's going to be called EDX. They're going to be open to institutional investors as well as retail. And it's really just meant to serve as a powerhouse exchange backed by the liquidity of legacy financial institutions. Other notable contributors in the venture include Paradigm, Sequoia Capital, and Virtue Financial. Wow, having a hard time reading today. As Bitcoin Magazine previously reported, we look forward to welcoming additional participants into the exchange, which will drive ongoing trading in this important asset class. I think it's funny that now they are admitting that this is in fact an asset class where just a few years ago, these players were actually trying to keep everybody out of the crypto space. I think this is just an attribute to what I was just mentioning a moment ago when I said, hey, buy your crypto, stack it away, and try not to get too bummed when you see down prices like this. I mean, if you take a look at where we're at here, Bitcoin down 7%, Ethereum down just under 5.5%, ADA 5.2%. This is an excellent day to work on your dollar cost averaging, and I really, really mean that. Memex is an operator funded in 2019 with a special focus on technology infrastructure. The infrastructure provider was chosen by EDXM to build a scalable solution that will enable the exchange to operate within a magnitude of markets for both institutional and retail investors. The only thing that this article is really missing is the expected launch of this exchange. If I had to guess, I'd say that's probably going to be somewhere in 2023. Over the last couple of days to a couple of weeks, we've been getting information of a lot of crypto-friendly products that are getting ready to come out in 2023. And I don't think it's done that way on accident. I think what a lot of these players are doing is they're paying attention to the Bitcoin halving schedule, and they're trying to make sure that they are in position to reap the benefits from the next time the market starts to see a significant bull cycle, which will be in 2025. And I say it's 2025. If there's anybody that's out there that hasn't been paying attention, the halving happens every 4 years, 2016, 2020. The next one's going to be in 2024. And the way that the bull cycles run, it's usually the year following the halving where we start to see significant price appreciation. So how do we make sense of all the information that we have here? We know that there's more legacy institutional players that are getting ready to move into the space and offer products to not just retail investors, but institutional investors as well. We also know that the macroeconomic situation or landscape for investing doesn't look that good, but for a young emerging asset class, I think it's definitely the smart thing to do to make sure that you're buying assets at these discounts and dollar cost averaging in, so that when the market does in fact turn around, you're in a position to reap benefits for you and your family. Again, nothing that's mentioned in this video should be taken as financial advice. It's rather me just sharing information with you so that you can make the best possible decision you can for yourself and your family moving forward. My goal here is to provide you with objective information, not so much the hopium and the hype, but information that you can really use that will benefit you long term, down the line. So if you've liked what I've brought into you the way that I've brought it to you, please consider subscribing to the YouTube channel. See, that's here, right here, Crypto Glenn. Just want to say thank you to everyone, all 6,000 subscribers. You guys have helped me immensely, and we just want to keep the growth on the channel happening. You can also feel free to follow me here on TikTok at Crypto Glenn. Again, way more volume of videos that are pumped out. Same great format, same great information. You just get it on a regularly more readily available basis, sometimes 3 or 4 videos a day. So if you like that, please feel free to join me on these platforms. And as always, you can join me here on that's not my Twitter. What are you doing, Twitter? You can feel free to join me here on Twitter. There you go, at Crypto Glenn. With that being said, I'll see you on the next one. If you have any questions, comments, or concerns, feel free to leave them in the comment section below, and any questions I can answer for you, I'll be sure to do so. I'll see y'all in the next one.